Good evening, everybody. It's um, it's a pretty late Father's Day Eve. It's like 11 o'clock at night, and I was sitting on the couch watching Avatar: The Way of the Water, and I had a thought come across my mind. I said, "Hey, got something that I want to share." For those who don't know, um, I've decided to only share videos. Well, record a live stream because I'm not going to shoot it and edit it and all of that right there. But I've decided to only share videos when I have something that I feel is of value to traders. I'm beyond the education part of Tim's tidbits. Um, I'm to the point where I only want to share stuff that's going to be beneficial, truly beneficial for traders and investors. So, what are we talking about tonight, Tim? Cut to the freaking chase and stop all this yabber blabbing that you like to do. This evening, what's up? Oh, I see y'all pulling up in here. I see my sweetie in here. Good evening, baby. Shout out, Chief. Chief know what that means. Shout out, Lil Hawk. Shout out here to Learning Chef. I appreciate y'all for pulling up. But tonight, what we talk about? Patience without a plan, man. You hear people on the internet always talk about having patience pays. Having patience pays. Having patience pays. All right. But if you don't have a plan, what's the point of having patience? Having patience does not pay. All right. Having patience does not pay. Let me say that again. Having patience does not pay. You know what pays? Executing pays. Happy Father's Day Eve. You feel me? All right. Executing on your plan and following your plan to the T is what pays and saves you from losing it all. So having patience does not pay, right? Having patience is necessary so that you know when to execute, right? In order to know when to execute, you have to have a plan. Man, I just thought that all up. Y'all know I talk off the top of my head. That just came out of me. I can't repeat it. If you want to hear it again, rewind it and go back and look at it. Mark this minute and check that out. Now, all right, let's talk about it. Let's give them something to talk about. Let me open up my trading view. Let's give them something to talk about. Shout out to everybody that's in the Spider Gang, the Black Spiders. We had a late night session last night. We went crazy. That's what that stuff is on the chart right there. We went crazy. If you're in the Black Spiders, let me say this, man. Let me say this right here. I went in and I was looking at, the subscriptions to see if there was anyone still hanging around in the subscriptions. And there's I think 60 something people that's still in the Black Spiders, I think. Or is that 60 something people total members? Anyway, it's a bunch of people in there. So I said, hey, let me do a video. Let me just do videos for the Black Spiders, right? And the view count versus the membership count ain't adding up. I mean, I could care less, you know what I'm saying? Because I'm not monetizing those videos. I just do it because, y'all still supporting the channel in a financial way. So I said, hey, let me let me reciprocate the love. All right. But somebody's not utilizing it. But I thank you because I told y'all I'm not turning the memberships off. I'm not blocking my blessing. But as long as people are there, I will reciprocate the love. If you choose not to use it, yeah, I don't care. I'm not blocking my blessing though. You hear me? Okay. All right. Let's go to what I'm gonna talk about, right? Is having a plan. Now I'm going to the continuous contract of the ES, and we're going to go to the 1 day chart. All right. Tim, why are you doing this? Patience, grasshopper. Patience, grasshopper. Now, everybody says patience pays, right? But okay, so go to bed and happy Father's Day Eve to you. What's up, E-Rock? What's up, Sonya? What's going on, E-Rock? What's going on, Sonya? Hey, hey. Hey, we're gonna start. I told my son today, we're gonna start if you know about the super secret surprise, right? Next Sunday. Next Sunday. Super secret surprise. Super secret surprise. Uh let's see here. And I know y'all probably like, Tim, how you gonna say don't talk about the super secret surprise if you talk about a super secret surprise? Because 9 times out of 10, the people who know about the super secret surprise are the only people that's here. And if you don't know about the super secret surprise, don't worry about it. It ain't nothing big. It ain't nothing big. Anyway, let's get back to it. Uh when I patience, everybody talk about patience pays, right? Now, patience don't pay. You need a plan. Let me see. Next. Let's see. No, I say swing. Let's say swing. I'm looking for something. Next swing entry right there. That's what I want. All right. So you see that handy dandy picture right there? I sent this picture right here. I think I shared it in the Discord, I believe. I texted out to a few people. Let's see if I shared it in the Discord. I made that on April the 3rd. Let's see if I shared it in the Discord. Uh, I don't know. I guess I don't know. Maybe I didn't put it in there. I don't know. I guess I thought I shared it in the Discord, but obviously I didn't. Can you sort this by date? Can you sort it by date? Man, there's a lot of stuff in here. It's still in June. How do I get back to April? You got to be kidding me. I done scrolled up 99 times and it's still in June. Okay, y'all know I'm tired of looking for this now. That's me when I yeeted Robinson off the cliff. 526. Okay, I'm tired of looking for it now. Anyway, y'all know I can't stop, right? I'm tired of looking for it and then I can't stop at the same time. I can't stop at the same time. 420. 49. Getting close. Getting close. Wait, ICT, that's 327. Stay silent, getting close. And it's not in there. Might have shared it with the membership. Anyway, neither here nor there. I can't find it. Get out of here, Discord. Close you. So, all right. Y'all see what this says right here? My game plan for my next SPY swing trade. All right. Remember what I said? Patience doesn't pay. Executing on your plan is what pays. So patience without a plan is a huge mistake for traders and investors, right? So if we look at this pictorial, as picture, that's fancy way to say picture, right? If we look at this picture right here, right? If you look at this right here, and then if we come over here to the chart and we move this all the way over to there, just like that, right? You will notice that this is what the chart looked like at this time, right? If you come over here to this last count, you see this little candle right there that was being made, right? That candle that was being made right there, that wasn't quite made right there, right? These are daily candles. Said we had 9 hours and 52 minutes left to finish this day right here, right? That's that candle right there in the corner. See down at the bottom, it says April. It'll say April 3rd down there. When I hover over that candle, Monday, April 3rd, that's that candle right there. So this where it was, right? So now my plan was, right? If you look at this BISI right here, that would be that BISI right there. My plan was, right? This BISI right here was the possible entry, right? And then this BISI right here was the preferred entry, right? All right. Now, let's talk about why this was the possible entry and this was the preferred entry, all right? So, according to my, okay, participation time. For those who've been around for a while and those who know my trading strategy that I use on the noise time frames, right? Can somebody tell me what I look for when I'm trying to plan my entry? What do I need it to attack what, do what, and then do what? What do I need it to do? Right? Somebody tell me that while I drink me a sip of water. the water has been sipped. Now, continue to type away. For those who don't know, all right, I need price to attack opposing liquidity, right? Meaning run stops, right? Because if you see up here, right, it says target 1, right? Target 2. So this is my draw area. My draw is up here above these highs. So very good. Hit learn and share. You see that? I said I needed to attack opposing liquidity. Step 1. Very good. Hit learn and share, right? As you see over here, price attacked opposing liquidity. What makes it opposing liquidity? My draws up here. Let's get to typing it out. Let's get to typing now. Right? So my draw was buy side liquidity. Right? So 1, I needed to attack opposite. Is that right? Liquidity. Right? Needed to attack opposing liquidity. Right? So we came here. We were right here. We came down and we attack that sell side, right? Very good. Very good. Here, learn share all over tonight, right? So let's see. Let's talk about what we did, right? We attacked opposing liquidity, right? We attacked the sell side right there. All right. Reverse and go in the direction of the draw. Very good. Very good. Right. 2, I need a payout. Right. In direction. Let's say towards draw. Right. I need a payout towards my draw. Right. All right. So where's my arrow? Right there. Ran, attack, then pow! Right there towards my draw. Right. All right. The breaking market structure, pow with the breaking market structure right there. All right. Right there. I don't have a breaking market structure. Here's my breaking market structure, right? Let's give them something to talk about, right? Let's give hit learn and share is all over tonight. Before I can type it, she's saying it, right? Right. Now that payout, right? I need that payout, right? To create a breaker and leave a fair value gap, right? Breaker, and fair value gap, right? And then once it does that, I need price to come back, right? Come back to fair value gap and breaker, right? Now, this right here, right? Thank you, here, learn share. You went crazy with the participation. Everybody else, get off my live. Now I'm just playing. Hey, this right here, right? Those are the rules for my entry model setup. That's a part of my plan, right? And now, what makes this the possible entry and what makes this the preferred entry, right? This right here is the possible entry because it gives me everything that's a part of the rules. That's my plan. Why is this? If this entry right here says possible entry, right? Why does it not say preferred entry, right? If it gives everything that's a part of my rules, right? That's in my plan, why does it say possible? It says possible because if you look right here, there's another BISI that's below that BISI there. So there's more imbalance to the downside. And what does price always seek to do? Price always seeks out. Y'all can feel free to type it with me if you want to. It always seeks balance and liquidity. Price always seeks balance and liquidity, right? So if this point right here, that fair value gap there that I highlighted there, if that gives me everything that I want in my plan, according to the rules of my plan, when I have the patience to wait for price to come back to the area that fits all the rules of my plan, what am I going to do? Someone put it in the chat for me. What am I going to do when I have the patience to wait for price to come to the point that follows all the rules in my plan? What am I going to do? What did I say pays you? If patience don't pay you, right? What did I say pays you? So when I have the patience, right, to wait for price to come back, price to come to the area that fulfills all the rules of my plan, what am I going to do? No one knows. No one knows. Let me type it out and see if you're thinking it, since no one is typing. I don't know how to spell. Yes, I'm going to execute. Take the trade. I'm going to take the trade, right? I'm going to execute. So I'm going to put execute right there. I'm going to execute there. There is where I'm going to take the trade. That's the same thing. Thank you, here to learn to share. You all over it. I'm going to execute, right? So if I'm going to execute here, right, down here, I have to account for price coming to there, right? And if price gets to that point, right, I'm either going to add more or just know that I accounted for this drawdown because there's an imbalance here. And so price always seeks balance and liquidity. So this price meets all the criteria of my plan. So I'm going to execute right here. Executing gets you paid. Patience does not. Patience helps you determine when to execute, right? patience helps you determine when to execute. Once you execute, your plan keeps you from panicking when it comes, when you take a little drawdown right there. If it comes to the preferred entry, here's what you can do. At the possible entry, right, put on a piece, right? Let's just say you got $100. Put $50 on here because there's a possibility for it to come down to one more imbalance, right? Let's say this was your possible entry right here, right? Then you could put a third on here, a third on if it came down here, and the last third if it came down there, because it's a possibility for it to come two more stops below, right? But that will be a part of your plan, right? So you execute when it meets all the requirements, and then your plan is going to keep you from panicking when it continue, if you start to take drawdown and you know exact, you're anticipating this move. There's no guarantee that it will happen, but your plan lets you anticipate that move because you thought about it beforehand. Look at the candles, where the candles are, right? Nothing has happened to the right yet, but you have thought this out. You even know where you're going to get out. You know where you're going to get out up here, right? Do you have to hold for all of this up here? No. Did I hold for all of this up here? No. I held for the percentage that I wanted, right? I got the percentage that I wanted well before this, right? I got it well before this right here. Now, let's move forward, right? Now, let's talk about patience, all right? April 3rd is when we planned all this out, right? April 3rd is when we started planning. Why did we start planning this? Because we saw an attack on opposing liquidity, right? We saw a pang out in the direction of the draw, right? And we saw that price left a breaker and a fair value gap. Here's your breaker here, right? These three up close candles there. That's your breaker right there, right? Here's your fair value gap right there. That's in line with the breaker right there, right? If you get you a Fibonacci tool, if you get you a Timonucci tool, all right, run it up there, all right? Let's get to the correct low. That low right there, because this is the low when we left this balance price range right here. This fair value gap right there is just below equilibrium, and it's the fair value gap that was created when we left this balance price range right there. All right, all of this right here shows you that's the balance price range, and then we left it there. That's the first imbalance that we recreated, and it's right there in line with the breaker. And then this is the downside risk for this entry. This fair value gap is the downside risk. Your plan is accounting for all of this, but this one right here is in the discount at the breaker after we left the balance price range. That's the one that meets all the requirements, right? Now, let's talk about the patience, right? If we come over here and get us a line tool there, from the day we planned this out, right, to our first opportunity to enter. I don't know if you can see that, but that says that we would have had to wait 17 trading days, and 23 calendar days. 23. 3 calendar days, right? Talk about patience, right? That takes some patience to sit there and watch price do all of this right here, right? Right. You see this right here? We came back down to this fair value gap right there, right? And we didn't get quite into right here. We did not get quite into the body of the breaker. Right here, we came down into the wick of the breaker, then price went up, right? Now, mind you, if you did not have a plan, right? If you did not have a plan, this right here, and we run up like that, that could have made you panic and say, oh my goodness, I missed the mark. Let me just buy it around here somewhere. But since you have a plan, you can be patient and wait for price to come to wherever your plan says come. When you made this plan, possible entry was not here, right? When you made this plan, possible entry and preferred entry was not here. So when price came here, right? When price came here, right there, right? You did not execute as you shouldn't. So when price runs up here, you should not panic and chase, right? Because this was not part of your plan. Every trade, every move, every up and down is not your trade. Your trade is the one that you make a plan for, and then you patiently wait for price to do what your plan says, right? So 17 trading days later, 23 calendar days, price gave you an opportunity to get in, right? Then price took off, right? Now, if you went in and you put on half of your position, this is where experience comes in. And I'm just going to share this gem because this is where experience comes in, right? If you got in here, shout out Casey for becoming a member. Casey, thank you for becoming a member. Like I said, I did not turn the memberships off. The membership area is not as active as it used to be. It used to be very active because I was doing daily live streams, and but now I don't do daily live streams anymore. I'm past the teaching part of Tim's Tidbits, but as long as people are in the channel memberships, I still will share, you know, whenever something popped to my mind that I want to share exclusively for the members, like I did last night. But it's not going to be elementary stuff. We're sprinting now. We're sprinting. So I'm a cool dude, but I can be kind of like short. I can be kind of short sometimes. So don't be offended if you act something elementary and I say something kind of off the cuff. But welcome to the family, gang. Anyway, like I was saying, let's share the experience part of it. Now, say you put on half of your position here, right? Get off my screen, Case. Half your position here, right? Now, your plan could have said, right, if price continues down, I'm going to put on the other half. right? So when price started to go up here, right, and we took out this high right there, and then we started to retrace back down, right? We're not panicking because we took out this high and started to retrace back down. Because what are my quick ways of trying to determine the draw? Whenever we take out a high and we reject, or whenever we take out a high or a low and we reject, right, the high or low that sent us there, that now becomes the short-term draw. So when we take out this high and reject it, we anticipate price attempting to take out this low, right? So our plan lets us know that whenever we take out a high or low, there's a possibility to retrace, to pull back, or full reverse. So we have it in there how we want to act. So you can scale out. Me personally, I closed there because I was beyond my percentage that I wanted, right? You can take some partials. You can close your trade. You could just hold on and ride because you anticipate price to come back down and take out this low, and that gives you another opportunity to put on the rest of your position, especially if it comes all the way down to the preferred entry. Now, here's another piece of gem that I will share. I spoke of a balanced price range down here, right? Now, let's talk about balancing the price range inside an imbalance. When price came down the first time, right, we came just below square encroachment, right? So we still had a little piece of this imbalance to finish up. So when price started to come back down after taking out this high and rejecting, we're anticipating it coming below and taking out this low, because this is the low that sent us there. So then we come back to take out this low, and you see, and now we're sitting here, we're sitting here waiting to see if price is going to come into this fair value gap so that we can put on our other 50% if we put on 50% there. That's what our plan said. Now, when we get to the low of this fair value gap and we reject like this, right? When we get to this low and we reject like this right here, price is giving us a clue, right, that it is done with this fair value gap right here. Well, Tim, what do you mean? Right? We came down into it, traded back out, right? We came back down to it again, traded back out, and closed there, right? So inside this day, right? Inside this day, it's showing you that it has repriced all of this fair value gap, and now it's rejecting off of it. It's repriced all of this and it's rejecting off of it. So it's highly probable that the algorithm does not want to go back down here, right? So if you were waiting to put on your other 50% here, when this day rejects off of this fair value gap like that after repricing it, then when the next day opens, you could just put on your other 50% here, right? Now, keep in mind, you still have to allow for this drawdown because it's still downside risk, right? But if you only put on 50, now you can put on your other 50% here, right? Now, just a gem to give it to you. Now, let's say you did not take it here because you noticed that we didn't completely fill this fair value gap. And your entry model said I needed to completely fill the gap before I enter, right? And you were patiently waiting. You waited for 23 trading days or 31 calendar days. That's an entire month. Talk about patience, right? But you patiently waited for price to come to your, your point. Now, let's just speed forward and see what patience would have given you if this was your entire, if you held it through this entire model. Did you make it all the way up here? And with the beauty of hindsight, we already know that we made it well beyond that, right? And for anybody who's wondering how I came up with these very specific targets, right? If you notice, my target one was shave 50% at 42.59, right? Shave 80% at 43.75 and close the trade above the August high, right? The August high right there, close the trade above the August high, right? And as you know, we got above the that's the August high right there. All right. That's the August high right there. We hit the August high on June 15th. Right there. That's the trade. And if you notice, the numbers and the prices are different because as the contracts change, the actual price will change, but the targets remain the same. Right? The targets remain the same. The numbers change from contract to contract, but it's all the same. So, moral of the story is patience without a plan is a terrible, huge, munganious mistake for traders and investors. Always have a plan. Map out your plan ahead of time. Have the patience to wait for price to go to where your plan says. If it does not go to where your plan says, don't chase. Live to trade another day, and you'll be all right. Will you get every trade? Will every trade work out in your favor? No, it won't. No, it won't. Back in April, you see what my targets were for it to go to where we are now, right? My targets were for us to go where we are now, back at the beginning of April, on April 3rd, when I shared this, April 3rd, right? My target was to come to the August highs, right? You've seen me speak on live. Me and Zay had a conversation on my channel, and I said, hey, the Dow took out the August highs. I anticipate the NQ and the ES taking them out also. The NQ took out the August highs next, and then now the ES has taken out August highs. I anticipated it. How did I anticipate it? By utilizing the techniques that I learned from Michael J. Huddleston. People call him ICT. Do you have to use his teachings to be profitable? No, you don't. But that's what I choose to trade. So that's what I choose to share for the free 99. If you are interested in learning that stuff, I recommend you visit his channel and check it out. I have plenty of videos on my channel that can help you understand in the way that, learn it in the way that I understand it. A lot of people say it's helpful for them. But I always say go to the source if you want to get it the right way. You can go to his channel, come to my channel, check it out. If you decide you want to take your stab at prop firms, I got a link for Apex in my description. I'll appreciate it if you use my link to sign up with Apex, but only sign up for Apex if you are a consistent trader. Don't go out there and YOLO and just think you can get rich quick, because you can't. You can't. That's all I got, man. I appreciate Casey Ray 19. I appreciate you. I don't know if I said Casey or Cassie last time. If I said your name wrong, I apologize. I appreciate you for tapping in to become a Spider Gang member. That's all I got. Do anybody got anything before I leave? While I'm waiting to see if anybody got anything, I'd like to say happy Father's Day to the fathers out there. I know it's very late. I appreciate y'all for being up this late on Father's Day Eve, so I'm not just talking to myself. I appreciate all 20 of you for hanging out with me. Even if it was nobody here, I would still talk like it was somebody here. I just wouldn't like ask y'all to participate because you wouldn't really be here. But thank you. Thank you very much. Thank you. Thank you. Thank you. Thank you. Thank you. Thank you. That's all I got, man. What is that? Oh, okay. That's the membership thing. I never seen that before. I never saw that. Did you start that, baby? It said it was starred. Does it automatically start? I've never seen that before. I never paid attention to that before. Anyway, man, y'all know what it is. Till the next time, I'll see you. Y'all enjoy your Father's Day. Enjoy your evening. Yeah, man. Big Spider, gone.